Hi, I'm Ruban Selvanayagam from Property Solvers Auctions. Over the last couple of decades, one auction route in particular has gained a notable presence across the UK property market, the modern method of auction, more formally known as a conditional auction. And the reason is fairly straightforward. A lot of sellers want more structure and certainty than a normal estate agency or private treaty sale offers. But at the same time, they don't necessarily want to limit themselves purely to cash buyers and investors through a traditional auction, where exchange of contracts effectively happens at the fall of the hammer. Modern method sits somewhere between the two. It combines the fixed timetable and upfront preparation associated with auction, while still allowing mortgage buyers to participate. And in today's market, where speed, pricing and buyer confidence all need to be balanced carefully, that's becoming increasingly attractive. So in this video, I want to break down how modern method actually works, why it's grown so quickly, where it tends to perform well, and what sellers should understand before choosing it as a route to market. Let's get into it. At its core, modern method is designed to widen the buyer pool. With a traditional auction, buyers usually need cash, bridging finance, or very fast access to funds, because exchange happens immediately and completion typically follows within 28 days. That naturally favours experienced investors and traders. Modern method changes the structure. Once bidding finishes and the reserve is met, the buyer pays a non-refundable reservation fee and secures an exclusive period, usually around 56 days, to exchange and complete. That extra time allows mortgage buyers to participate more comfortably, and that's the major difference. Because once owner-occupiers, first-time buyers, downsizers, or other residential mortgage applicants enter the bidding pool, the dynamics can change materially. In many cases, it means that broader competition can support stronger pricing than a traditional or unconditional auction, particularly on standard residential houses, family homes, mortgageable flats, and properties that appeal to owner-occupiers rather than purely investors. This is one of the biggest misconceptions around auction generally. People often assume auction automatically means distressed pricing, but historically that was more associated with traditional auction stock, refurbishment projects, legal complications, short leases, restrictive covenants, negative easements, structural issues, and properties suited to cash buyers. But modern method has opened auctions up to a much broader segment of the market, and in doing so it's changed seller perceptions as well. A lot of homeowners who would never previously considered auction are now open to it because the process feels closer to a structured estate agency sale, just with more commitment and a clearer timeframes built in. That said, it's important to understand what modern method is and what it isn't. It's not identical to a traditional auction. The buyer pays a reservation fee up front, but contracts are not exchanged immediately at the close of bidding. That means there's still a period where mortgage underwriting, conveyancing, and due diligence continue behind the scenes. So while the structure provides materially more commitment than a standard private treaty sale, it doesn't quite carry the same level of legal certainty as a traditional auction exchange. Indeed, it's worth being realistic about how these transactions work in practice. We've consulted with legal specialists on this point, and although the buyer is working to a defined 56-day timetable, if delays arise, most commonly around mortgage underwriting or conveyancing issues, there are often ways extensions can be agreed, albeit reluctantly by the seller. What's more, the fact that contracts are not legally exchanged at the fall of the hammer means that modern method terms and conditions are frankly less watertight, and buyer solicitors know this. In reality, however, many sellers just stick with the process simply because they don't want the hassle, delay, and uncertainty of remarketing the property from scratch. In the vast majority of cases, most buyers genuinely do want to get the transaction done and dusted. The issue is usually process and finance timing rather than a lack of commitment. But ultimately, because despite the stronger structure modern method provides, compared with a normal estate agency sale, traditional auction remains the more secure route from a legal perspective. The trade-off here, though, is that pricing will often sit lower because buyers are taking on more speed and funding risk. But in return, apart from a quick cash sale, sellers gain the strongest level of transactional certainty available in the mainstream property market. And this is really where the seller's priorities become important. At Property Solvers Auctions, we tend to find modern method works best where the property is mortgageable, the condition is broadly acceptable, the legal position is relatively straightforward, and there's likely to be owner-occupier demand. And because buyer behaviour today is very different from the ultra-low rate years, mortgage buyers are more cautious, affordability is tighter, lenders are scrutinising deals more carefully, and sellers increasingly value structure and commitment. Modern method sits quite neatly within this environment. It gives buyers time to arrange finance, but still works to a fixed timetable that prevents transactions drifting endlessly. Nonetheless, traditional auction often remains the better fit where heavy refurbishment is needed, timelines are critical, the property is unmortgageable, or the likely buyer pool is overwhelmingly investor or trader-led anyway. But another reason modern method has grown is transparency. Everything is prepared up front, including legal documentation, auction terms, pricing strategy, and buyer due diligence expectations. That tends to create much clearer expectations on both sides from the outset. And because bidding happens competitively within a defined window, sellers often get genuine price discovery relatively quickly. That's very different from sitting on the open market for months, making incremental reductions without really knowing where demand sits. If bidding is strong, you'll know quickly. If it isn't, you'll know quickly as well. And that clarity matters. There's also a behavioural point worth mentioning. Even though they're not paying a 10% deposit at the fall of the hammer, when buyers commit financially for a reservation fee, They psychologically approach the transaction differently. The process feels more deliberate and structured from day one, and sellers often find that reassuring, particularly after experiencing failed chains or prolonged negotiations through the traditional estate agency routes. Now, of course, as I mentioned before, modern method isn't perfect by any stretch of the imagination. Some properties simply won't suit it, and reserve pricing still matters enormously. But at our own auction service, whilst we have seen some delays with completion dates since launching in 2021, which we always warn sellers about, we've yet to see one modern method transaction actually fall through. I wish I could say the same about estate agency sales we've processed over the years. However, the structure of buyer reservation fees has become another fairly contentious aspect of modern method auctions that has attracted increasing scrutiny across the industry in recent years. Some operators charge reservation fees running into 5 or even 6% of the purchase price plus VAT, and on higher value properties that can easily become a 5-figure sum, payable on top of the agreed price. Others operate on large fixed reservation fees, which, particularly on lower value properties, can become disproportionately high relative to the purchase price itself. It's also important for buyers to understand that depending on how the reservation fee is structured legally, HMRC may treat some or all of it as part of the purchase consideration for stamp duty purposes. So if you're buying as an investor or a second homeowner, the additional property surcharge may apply to that amount as well, further increasing the true acquisition cost. Buyers factor these additional costs into what they're prepared to bid in the first place. And whilst they may still proceed, those fees inevitably affect behaviour and affordability. At Property Solvers Auctions, we've always taken the view that the structure should feel fair and commercially balanced for both sides. That's why our fees are lower and split between the buyer and seller, rather than loading the majority of the cost purely onto the purchaser. We believe that creates a more level playing field and supports more realistic bidding dynamics, because ultimately the healthier and more transparent the structure is, the more confidence both buyers and sellers tend to have in the process. So to draw this video to a close, modern method auction has grown because it fills a gap between the open market and traditional auction. It widens the buyer pool beyond cash and flash finance investors, while still introducing structure, commitment, and fixed timescales into the transaction. For some sellers, that balance works extremely well. For others, traditional auction or even the open market may still be the better route. The important thing is understanding which process actually aligns with the property itself and with what you're trying to achieve. If you'd like a straightforward conversation about which approach would be more suitable for your property, feel free to get in touch with the team at Property Solvers Auctions and of course request one of our free auction valuation reports. You can look us up online, email the team at auctions@propertysolvers.co.uk or call us 24/7 on 0800 044 3798. And should you be actively looking for auction properties, please also take the time to complete our investor profiling form. Once complete, we can send over suitable opportunities that fit within your criteria. I'll add the link in the show notes. A big thanks for watching, and if you found this useful, please like the video, subscribe to the channel for more clear, practical insights into how UK property auctions really work.